In the quiet corridors of global finance, a revolution is brewing. It's a silent coup, not of armies and tanks, but of code and algorithms. A new form of money is being forged, one that promises efficiency and modernization, but at what cost? This isn't a far-off dystopian fantasy. It's happening right now in the servers of the world's most powerful central banks. They call them central bank digital currencies, or CBDCs. But as we pull back the curtain, we have to ask, are we on the cusp of a financial utopia, or are we unknowingly building the architecture of a new digital empire? A new world order where every transaction is a data point and every wallet is a leash? The future of your money, your freedom, and your privacy is being decided, and the blueprint is already being drawn. The idea of a digital currency isn't new. For years, we've used credit cards, online banking, and mobile payments, but these are just digital representations of the physical cash held by commercial banks. They are liabilities of private institutions. Central bank digital currency is fundamentally different. It's a direct liability of the central bank itself, digital cash. Issued and backed by the state, existing purely in a digital ledger controlled by the monetary authority. The promise is tantalizing. Faster, cheaper transactions, greater financial inclusion for the unbanked, and a more efficient monetary policy toolkit for governments to combat economic crises. Imagine stimulus payments appearing instantly in every citizen's digital wallet, with the press of a button, no delays, no intermediaries. This global push isn't a fringe movement, it's a tidal wave. According to the Atlantic Council, over 130 countries, representing 98% of the global economy, are now exploring a CBDC. It's a race, spurred on by the rise of cryptocurrencies like Bitcoin and the fear of being left behind in the new digital economy. Nations see CBDCs as a way to reclaim monetary sovereignty from decentralized networks and private corporations issuing their own stablecoins. From the sand dollar in the Bahamas to the Naira in Nigeria, pilot programs are already live. Major economic blocs are not just watching, they're actively designing their own models. The European Central Bank is deep into the investigation phase of a digital euro. The Bank of England is drafting plans for a digital pound. And at the heart of this global race lies China, a nation that hasn't just explored the idea but has already deployed it to millions of its citizens. The digital yuan, or ECNY, is the most advanced CBDC project from a major economy, offering a stark preview of what this future could look like. It's a future of unparalleled convenience, but it carries within it the seeds of unprecedented control. Imagine a world where your money is no longer truly yours. It exists in an account controlled not by you, but by the same authority that issues it. This is the central threat of a poorly designed CBDC. Unlike physical cash, which offers anonymity and finality, a digital currency on a centralized ledger can be programmed, tracked, and even censored. Your financial freedom could be systematically dismantled, one transaction at a time. The very concept of privacy in your financial life could become a relic of the past. Every coffee you buy, every book you purchase, every donation you make could be logged and analyzed in a government database. This isn't just about collecting data for economic modeling. It's about creating a comprehensive profile of your life, your habits, your beliefs, your associations. The potential for control goes even further. Programmable money means your funds could come with strings attached. A government could issue stimulus payments that expire after a certain date to force spending and stimulate the economy. They could restrict what you're allowed to buy, blocking transactions for goods or services deemed undesirable, from sugary drinks to certain political publications. Negative interest rates, a controversial and difficult policy to implement today, would become trivial. A central bank could simply deduct funds directly from every citizen's wallet to encourage spending during a recession. Your savings, the foundation of your financial security, could be systematically eroded by decree. In a time of political dissent, access to your own money could be switched off with a single keystroke, effectively unpersoning you from the economy without due process. The ability to transact freely is a cornerstone of personal liberty. When that ability is contingent on the approval of a central authority, freedom itself becomes conditional. The global race towards central bank digital currencies is not a uniform sprint. It's a fractured competition with different ideologies shaping the technology. At one end of the spectrum is China's model, the ECNY. It is designed for maximum control and surveillance, integrating seamlessly with the country's social credit system. The People's Bank of China has direct visibility into transactions, enabling a level of state oversight that is unprecedented. The ECNY is a tool of authoritarian governance, optimized for monitoring and enforcing state directives. It prioritizes state control over individual privacy, setting a powerful and concerning precedent for what a CBDC can become. It's an architecture of digital authoritarianism, exported as a model for other nations to follow. In stark contrast, the European Union is attempting to thread a needle with its digital euro project. The public discourse is heavily focused on privacy, with officials promising a system that respects European values and data protection laws like GDPR. They are exploring features like transaction limits for offline use to mimic the anonymity of cash for small payments. However, the fundamental tension remains. A truly anonymous, cash-like digital currency would be a challenge to regulate for anti-money laundering and counterterrorism financing purposes. The EU's model is one of regulated liberty, attempting to balance the state's need for oversight with the citizen's right to privacy. The outcome is uncertain, but the debate itself highlights a deep ideological divide with the Chinese approach. Then there is the United States, which has taken the most cautious and hesitant path. The Federal Reserve has been studying a potential digital dollar, but has made no commitment to building one. The American debate is deeply polarized. One camp sees a CBDC as a necessary innovation to maintain the dollar's status as the world's reserve currency, arguing that China's ECNY could usurp its dominance in international trade. They argue that a well-designed digital dollar could enhance the financial system. The other camp, however, views a CBDC as a dire threat to American ideals of liberty and privacy. They see it as a surveillance coin, a tool that a future government could abuse to control citizens and suppress dissent. This political gridlock means the U.S. is largely observing. It's analyzing the moves of China and the EU, but its inaction is in itself a strategic choice. One that could see it lose its leadership role in shaping the future of global finance, for better or for worse. These three models: Chinese control, European balance, and American hesitation, represent the key battlegrounds where the future of money will be forged. Amidst this rise of state-controlled digital currencies, a question hangs in the air. What does this mean for the original vision of crypto? Can the dream of a decentralized financial system survive in a world dominated by CBDCs? We spoke with Dr. Evelyn Reed, a leading cryptographer and fellow at the Digital Freedom Institute. The emergence of CBDCs is both the greatest threat and the greatest validation for decentralized cryptocurrencies like Bitcoin, she explains, her words cutting through the noise of the debate. It's a validation because it proves the core thesis: digital currency is the future. Central banks are finally admitting that the existing financial plumbing is outdated. But it's a threat because they are co-opting the technology to build the exact opposite of what it was intended for. Bitcoin was created in the wake of the 2008 financial crisis as an escape from a centralized, fallible banking system. It offered a network with no CEO, no government control, and no single point of failure. Dr. Reed argues that the future will likely be a bifurcated system. You'll have the state-sanctioned CBDC world, convenient, integrated, but surveilled. It'll be the system for paying taxes, receiving government benefits, and everyday regulated commerce. It's the easy button. But alongside it, she believes decentralized networks will persist as a crucial alternative. Then you will have the free market layer, the Bitcoin and decentralized finance DeFi ecosystem. It will be the digital gold for savings, a hedge against inflation and censorship. It will be the choice for those who prioritize sovereignty over convenience. The battle will be fought on the interfaces between these two worlds, the exchanges and on-ramps. Governments will likely seek to heavily regulate or even restrict the flow of funds from CBDC wallets into decentralized networks. They'll frame it as a fight against illicit finance, but the underlying motive will be to keep citizens within their walled garden. Survival for decentralized crypto, Dr. Reed concludes, depends on its ability to remain truly decentralized and censorship-resistant. It also depends on people understanding what is at stake and making a conscious choice to preserve their financial autonomy. The path forward is shrouded in uncertainty, a digital crossroads where the choices we make today will define the nature of freedom for generations to come. We stand on the precipice of a new era, one that could usher in a golden age of financial efficiency or lock us into a digital empire of surveillance and control. The technology of central bank digital currencies is neutral. Its application is not. It can be a tool for empowerment or an instrument of oppression. As governments worldwide race to issue their own digital cash, the principles of privacy, autonomy, and the right to own your property are on the line. The dream of a decentralized alternative, championed by the pioneers of cryptocurrency, now faces its ultimate test. This is not just a story about technology. It's a story about power. The question is no longer if the world's money will go digital, but on whose terms. And as this new world order takes shape, we must remain vigilant, for in the silent language of code, the future of our liberty is being written.